You deposit a check on Monday morning. Your bank tells you the money will be available Wednesday, maybe Friday, maybe 9 business days from now. During those days, the bank holds your money. They can lend it out, they can earn interest on it, they can use it. You can't. That's not a glitch, that's federal law working exactly as written. Today on RightsDecoded, we're decoding the rule that decides when your money is actually yours. In 1987, Congress passed a law called the Expedited Funds Availability Act. The problem it was solving was simple. Banks were holding deposits for weeks. People were getting hit with overdraft fees on money they'd already deposited. Congress stepped in. The Federal Reserve wrote the actual rules. They named it Regulation CC, and it's been the rule banks have to follow ever since. Here's what Regulation CC actually says. Regulation CC creates 4 categories. 1. Cash deposits, like physical bills you hand the teller, available the next business day, no exceptions. 2. Government checks, cashier's checks, and certified checks, the kind of check that's effectively guaranteed, also next business day. 3. The first $225 of any check you deposit, available next business day, no matter what. 4. Everything else. And everything else is where the bank gets 9 business days. Why 9? Because Regulation CC lets banks do something called placing a hold. 6 different kinds of holds, actually. We'll cover the 3 you'll run into. First, the new account hold. If your account is less than 30 days old, your bank can hold almost any deposit for up to 9 business days. They don't have to give you a reason. New account, longer hold. That's the rule. Second, the large deposit hold. On any single business day, if you deposit more than $5,525 in checks, the bank can hold the amount above $5,525 for up to 7 business days. That number, $5,525, was set by federal regulators and updated for inflation in 2020. Most depositors have no idea it exists. Third, the suspicious deposit hold. If the bank has reason to believe a check might bounce, they call this a reasonable cause hold. They can extend the timeline up to 9 business days. The catch? Reasonable cause isn't defined precisely in the rule. The bank decides what's reasonable. They have to tell you in writing why they're holding it. They have to give you a date, but they get to make the call. So that's the rule. Cash, government checks, the first $225, next business day. Everything else, up to 9 business days, depending on which hold the bank decides to apply. Now, here's where it gets interesting. The rule says the bank can hold the deposit for that long. It doesn't say they have to. Most banks default to the maximum hold the rule allows, even when the check has cleared the issuing bank in hours, even when the funds are technically already in their possession. Why? Because every day they hold your money is a day they get to use it. At any given moment, U.S. banks are holding more than $200 billion in customer deposits that are technically pending availability. $200 billion, earning interest, for them, not you. That's not illegal. That's the system working as designed. The 1987 law was supposed to fix the problem of banks holding deposits for weeks, and it did. They can't hold them for weeks anymore. They can hold them for 9 business days, which, depending on where weekends and holidays fall, can be almost 2 real-world weeks. That's federal law working exactly as written. just not always working the way most depositors assume. So if you've ever wondered why your paycheck deposit goes through instantly, but your tax refund check from your accountant takes a week, now you know. It's not a glitch. It's not your bank being slow. It's the rule and the bank's choice about how to apply the rule. 3 things you can do about it. 1. When you deposit something larger than a paycheck, ask the teller, or check the deposit confirmation in your app, when the funds will be available. Banks are required to disclose the hold. If they're applying one, they have to tell you. 2. If you regularly deposit large checks, settlements, contractor payments, real estate proceeds, talk to your bank about a relationship that reduces the hold. Many banks waive holds for accounts that meet a balance threshold or have a long history. They'll never offer this. You have to ask. 3. If your bank places a hold and refuses to tell you why, or holds the money longer than the rule allows, that's a violation. You file a complaint with the Consumer Financial Protection Bureau, the CFPB. Their complaint system is online, free, and federal banking regulators read every one of them. They're the agency that decides whether your bank gets fined or sanctioned for violating Regulation CC. Use them. One more thing, quickly, for viewers outside the United States. The rules I've described are American federal law. Different country, different system. The UK has the Faster Payments Service. The EU has the Payment Services Directive. Most modern banking systems have their own version of this rule. The principle is the same. Federal regulators set a maximum hold, and banks decide how close to the maximum they want to get. Look up your country's banking regulator and the rule that governs deposit availability. It exists, it's enforceable, and almost no one reads it. Has your bank ever held a deposit longer than you expected? Drop the situation in the comments. How long was the hold? What kind of check? And did the bank tell you why? I read every comment. Next video might decode whatever pattern shows up. Now you know. Use it.